for our Monday Market Matters session today, where we're going to talk about a basic introduction to smart money concepts, SMC, a very popular, let's say, a very popular trading style if you look on social media at any point this morning, or in fact this for this whole year. 17th of July. My name is Paul. We're going to try and cut through this. I apologise. We lost a little bit of time. I do apologise on that, but there we go. The tech sometimes fights us, doesn't it? So as always, just to remember that start with a quick risk disclaimer, namely that you have to remember that trading involved does involve a good deal of risk, which you need to manage, and that you are ultimately responsible for your own trading decisions. So what should we look to cover today in our Money Market Matters session? Well, as always, we have a little bit of an introduction to the week, introduction to the market. We'll talk about smart money concepts, okay? Why have they become popular? What is it about them that are exciting people? And what are some of the concepts that we can take away and utilize today? SMC is, it's a very broad church in terms of, everybody who comes there in terms of the trading there. So unfortunately, I can't do it full justice in the time we have available. But what I'm going to do is I'm just going to focus on sharing a few of the main concepts that you can take away. And then if, you particularly want to know more details, well, we can do future sessions to cover them in depth and actually look at some specific trading tactics. But hopefully there'll be some elements you can take away, start to understand better and utilize in your own particular trading styles. And then, as always, we'll have a little look at the live markets as we start up for the open of the US markets for this week ahead. And maybe we'll be able to utilize some of the concepts we're talking about in this session in terms of our analysis of those US markets as we start to open up. So as I said, I hope you can all still hear me, and hope you can still all see the slides and such. And for those of you who don't know me, my name's Paul, traded for a long time, traded for funds, traded for clients. My primary sort of trading markets tend to be FX, indices and commodities. I tend to be a trend trader for position trades, and I tend to be a reversal trader for my shorter term intraday trading, which actually, it looks like, elements of SMC are in my own particular style of trading. I've traded for many years, but, good concepts and good tactics are good wherever they come from, if they work for you and help you. So hopefully I'll be able to share some elements of that, maybe demystify one or two of the elements, okay, one or two of the basic elements that we find ourselves working with. So for those of you who don't know me, first time joining Monday Market Matters, and this is our regular webinar series every 2:00 London time, Monday afternoon, where we prepare just for the start of the open of the US markets, prepare ourselves for the week ahead. So, we always have a little look at some of the news, okay, maybe the news to be aware of for this week ahead. We'll always have a bit about education in terms of helping you build your trading knowledge. So today it's going to be looking at SMC, smart money concepts. We'll also have a look at the ActivTrades platforms and some of the tools that you have access to as an ActivTrades client. And then, as always, we'll look at the live markets as we start the open of the US session. And that'll be in about 12 minutes or so, and we'll work and build up from that. As always, I look to just talk about the news for the week ahead, and I do repeat it every week, namely that if you are a new trader, I don't expect you to be able to do the underlying fundamental analysis of the economic data that comes out. But it is important that you know when it's coming out. You will find that there is an economic calendar on the ActivTrades website that you can access and elsewhere, and that also the analysis team at ActivTrades will send out a weekly little update, okay, of the major news ahead. And it is important to know when that news is coming out. So, we had quite an interesting week in markets last week. There's probably likely to be another interesting week ahead, right, as we look at some of the data coming out. We already had this morning, Chinese GDP, which kind of, was to the low side and kind of, was below expectations. That has an impact there in terms of overall risk sentiment, had an impact on things like the Aussie dollar, which sometimes people utilize as a proxy for China. Tomorrow we've got the Royal Bank of Australia. We've got the minutes from their last monetary policy meetings. We've got Canadian inflation figures, which people will be interested in, and also some data from the US and New Zealand. Certainly let's say for ourselves here in Europe and certainly in the UK, the kind of the big data of the week is on Wednesday, where we get the UK CPI data. Okay, and this will be keenly watched by traders of the sterling, or people interested in the UK economy, because invariably how those numbers come out, if those numbers are still hot and it still shows high inflation compared to decelerating inflation in other, let's say, Western nations, well, then invariably that will put a lot of pressure on Mr. Bailey and the Bank of England into terms of what they actually do and how. How many and how much in terms of interest rate rises may be coming down the line for the remainder of 2023. Alternatively, if those numbers are much lower than expected, well, then I expect to see the sterling strength we've seen over the last few weeks, and that will probably take the wind out of the sails there. Thursday, we've got Australian employment data, US FLFIDI manufacturing index data, and some Japanese inflation figures, which people will be interested in, as always. And then Friday, the UK and Canadian retail sales are due to be released. So, as I said, you don't need to maybe be able to, completely analyze all of that data, but you do need to know when it's coming out, the time it's coming out, because there's a good chance the big data, that will induce volatility into that market, and that's something you need to be aware of as a trader as you manage your own risk. So, having looked at the news, let's have a look at our education element. And, today I'm going to give you a very brief and basic introduction to smart money concepts, SMC. Now, it would be interesting to know, of those of you here joining us today, how many of you are either aware of SMC, how many of you actually actively utilize it in your own trading style at the moment. It'd be interesting to know what your own experience has been, if any. Maybe you're here and you've just never heard of it before and it's completely new. Even that's absolutely fine. That's what these sessions are for, to help people, just give them a little bit of an educational insight into various aspects of trading. But as the slide says, in recent times, if you've spent any time exploring trading or Forex or even other instruments on social media, you've likely encountered discussions about smart money concepts, okay, SMC. Okay, they're incredibly popular at the moment and stuff. So John says that he did well there, okay, following that on Ethereum. Well done, absolutely fabulous work there, John. Fabulous work for him. Well done to you. And as I said, it is enormously popular at the moment on social medias, okay, regardless of whichever platform. I find it's very, very popular. And what we find is that the concepts that are being utilized, they are the kind of, let's say that they are fashionable. All right, they are fashionable. They are the sort of the buzzwords and language. That is the way of operating recently. And today is setting up a very, very brief, very basic introduction to some of the main principles of SMC. Just even before our little tech issue, in terms of limited time, I'd say we're unable to cover anything, and to do it full justice today. What we'll be able to do is maybe just help new traders just to understand some of the let's say the basic key concepts, and then you'll be able to decide whether you wish to incorporate it into your trading. And and if you find it useful, you find it helpful, well then by all means, let us know, give us a little bit of the feedback, and I'll be happy to build more in-depth levels of it into future Monday Market Matters sessions. Today is, as I said, just a very, very, very brief, basic introduction, and hopefully for new traders, just give you a little bit of insight into what people are talking about, so you can understand when you hear people throwing away the sort of the buzzwords and the language. Now, where has it come and what actually is SMC trading? Well, I'm not going to go too much into the, let's say, the kind of the individual or the sort of the team that are coming from it. Some people might see them as a bit controversial. We're all adults. You can make your own. You can make your own choices and your own decisions, based upon your own research. We're here really just to talk about the trading element, all right, and whether there are interesting and useful concepts that you can take away and utilize in your own trading. in terms of what it is, many people would see it as an alternative approach to just pure price action trading. And what we would see is that it employs some classic elements and principles like supply and demand, price patterns, and support and resistance, but we'll present them under new names, different descriptions, and let's say, and variations in particular style. And if you're new to trading, there's lots of terminology to take on board as it is, but some of the terminology might seem unfamiliar. There is a lot of jargon, but what I would say is that elements, all right, some elements, not all, but some elements are more akin to traditional trading styles than it initially seems, and part of that is because good trading tactics, good trading methods, they tend to be looking at the sort of, let's say, the same types of moves in markets, the same kind of the same sort of patterns that repeat themselves, and so it's a variation on a theme, okay, and it is presently the let's say the very popular, if you have any interest in trading, go onto any form of social media, you'll find that that SMC, smart money concepts, okay, and interpretations of it are everywhere, okay, and as to why that is, well, that's probably a debate for a different day. Here we're just here to talk about trading. All right, that's it. That's actually all we're really interested in, isn't it? All the elements of this that would be useful to me, and I could utilize in my own trading to help me make a better trade. And that's what I particularly want to focus on. Okay, I know lots of people like to debate things left, right, and center. Ultimately, I'm a trader. Are there elements here that can help me trade better? If there are, I'll utilize them. If there aren't, I won't. And that really is, that might sound quite simple, quite brutal, but I've learned over the many years that actually ultimately that's all that really matters. So what does it mean? What does it actually imply? And as I said, we could debate this for days and weeks, but we've only got a few minutes instead. But SMC states that the market makers, such as top tier banks and hedge funds, are the smart money. Right, that's how they would know. And they are entities that operate to maneuver markets in order to make trading more challenging for everybody else, which for ourselves is would be for us, but for other, let's say, smaller institutions as well. So the SMC approach, the smart money concepts trading approach, is based on utilizing the actions and patterns of that smart money to trade like the supposed smart money themselves. And so whilst that's perfectly feasible as an idea, what I'm always a little bit wary of is that people who are very new to trading and thinking that SMC means they are trading exactly like the banks and hedge funds, that's incorrect. Okay, having traded for banks and hedge funds, etc. myself, is a case of SMC is not the way that the vast majority of banks and hedge funds. But there are elements of it, all right. There are elements of where people look to do their business and how they look to operate markets that are very, very relevant and can be very, very helpful. And so, as I said earlier, it's about what can we take that we can actually utilize and help in our own trading journey. That's the really important thing. So things we see, things like, they focus on aspects like supply and demand. They focus on things like market structure. And SMC traders will pay attention to those factors before making trading decisions. And so those SMC traders, they are like every other type of trader. They're just trying to gain an edge in their trading by capitalizing on the moves of what they believe to be the so-called smart money. And so, as I said, whilst there's lots of jargon and there's lots of different styles and there's lots of different, they would call it, talk about models, in reality, they are still looking at market structure and supply and demand in the markets. Okay, and we'll hopefully look at a little bit more of that as we cut through the rest of our particular session. And as I said, sometimes the terminology can appear quite technical to a complete newbie. Okay, someone who's very new to trading. So today, as I said, I'm just going to focus on clarifying some of the most basic elements. All right, just some of the elements that you can pick up and take away. if you find it useful, and if you want us to go into more depth, okay, and provide more sessions on it, well then, by all means, let the English desk at ActivTrades.com know, okay, if the feedback, if you found it useful and helpful, and we'll build it in, okay. We want these sessions to be as useful as possible to you, to help you as much as you can. And if you found that and you'd like us to do more in it, well then please let me know, and I'll be happy to build that into future sessions. So let's look at, as I said, some of the basic concepts and terminology of SMC that are useful to know and to take away, okay, that you can utilize in your trading. And you might already use variations of it of a different sort, okay, already. So you will hear lots of SMC traders talk about liquidity, okay. They love a bit of liquidity, okay. Everything's about the liquidity, and their definition of liquidity is price points or levels where orders are accumulating. In particular, they're looking for like resting buy and sell stops. Now, in reality, liquidity can be found everywhere, but there are certain points that are of more interest than others. In particular, things like above old highs and lows, or above and below equal highs and lows, or perhaps under or beyond the other side of trend lines, etc. But to begin with, even if you can just identify relevant recent old highs and lows, that will help you, because you're thinking like those SMC traders are looking at, because as I said, they're always looking to sort of identify the liquidity, and they are always looking for what would be the next draw on liquidity, what would be the next level or the next point where actually price is most likely to move to, and it's most likely to move towards, because that is where those orders are. Those orders are what create those pools of liquidity. And so what we see is that identifying those liquidity levels, they often become the targets for many of those SMC traders' views, okay, or their particular trade setups. And let's see if I've got a bit of a drawing tool here. Anyway, I've just said this is euro against US dollar 15-minute over the overnight, okay, at the end of last week. And as I'm coming into as we're coming into the session, what we're looking to do is to identify the particular highs and lows. And this here, okay, this was a significant low as we were coming in over the night session, and then we put in here, okay, we put in a new particular high here. And so it's no surprise, as I said, you're identifying areas of liquidity because they're beneath recent highs and lows, because invariably that is where lots of orders will be. That's where lots of orders will be sat, and so those orders, they draw price towards it. Okay, think of them like almost like a magnet, all right. But in many ways, it's not massively dissimilar to people identifying, levels of support and resistance in terms of the way they do it. People are always interested in highs and lows, or even price action. People are looking for previous days highs, previous days lows. These are variations on a theme. People looking for these levels, and the reason they're looking for those levels is because it's an area where the market may well react, and that reaction is what provides the opportunity to trade. So in this particular case, hopefully you can see that, having identified, we're just looking there, where are the highs and lows? Where are the particular, where are the elements of liquidity? Okay, sell side liquidity, buy side liquidity, they would say. But you can see there yourself that actually, as market identified it, well, it was no surprise to find the price actually went down to that particular area. And what did it do? Well, in terms of price action, some people might say, well, that was just a variation of a false breakout. Okay, others would look down deeper into that and recognize that, other patterns within patterns. But you can see that once price had actually achieved that significant, that particular level of liquidity, it bounced off it. Okay, and where did it go? Well, it went, the next drawn liquidity was the recent high, and it's no surprise to see that price went up there, okay, and on the 15-minute chart, it fell away from there, okay, it moved away from there, because what we're looking to do is to purge those orders, okay, purge the dust where there's big elements of big, pools of liquidity, pools of where people's buy and sell stops, okay, will be, and that's where markets will be drawn towards, because that's where the smart money wants to do most of their business, all right, because remember, they're trading at size, so they need to be able to sort of offset their orders, and they will look to do that to where they believe those pools of liquidity are. So you'll hear them, to SMC traders, talk a lot about those kind of pools of liquidity. in many ways, you're looking at either like previous days highs and lows, or previous weeks highs and lows, or might even just be levels of support resistance. And as I said, if you want to go more into depth, you can do looking at things like equal highs and lows, and also liquidity in terms of trend lines. But as I said, today it's just very, very basic introduction. Okay, just something to wet the whistle, so to speak, just to sort of get you interested and help you understand maybe some of the jargon and some of the sort of the concepts that that are bandied about on on social media. So that's liquidity. But one of the other elements is order blocks. Okay, and you'll hear people talking about order blocks, and my view would be, and people might differ, is that order blocks is just really a way that SMC traders, it's their perspective, all right? It's their view on areas of supply and demand, all right? Now, many SMC traders would state that order blocks are a bit more refined variation on that. That's fine. As I said, you could debate that for the rest of your days. Ultimately, today, we all want to know, just really, is this going to help me? All right, could this particularly help me? And I have even I have my own variation of it, but it's very often you'll hear SMC traders talk about it as a change in the state of delivery. What we're looking for is, I would define a bullish order block is it's the last bearish close candle before the market moved up and broke structure. Okay, so when I'm looking at here, this particular candle here, you can see the price actually had a particularly strong move there, didn't it? And I would be looking at, well, what was the last significant real bearish candle, bearish close before we moved up? Because that, I would be saying, is where the order block is, and then invariably I'd be projecting that forward. And supply and demand traders will be looking at this area. This is prices dropped, placed, rallied. Okay, and they would be looking at this as a base, right? That's what they'll be looking at. But because prices moved away from demand, and importantly, when price comes back to that area of demand, that is where people will be looking to trade. And on the flip side, all right, a bearish order block is the last bullish close candle before the market moved down and broke structure. So in this particular area, you can see here the price has moved down, but invariably what we see is that is I would be looking at that. That is the last bullish close candle before the market moved down and broke structure. And interestingly, okay, you can see what happened when price, hopefully when returned to these order blocks. That's what we're particularly interested in, because that in itself can become very simple trading method, just basically identifying the order blocks and trading, what happens, when they return to it. So in here, there's invariably still demand, so price bounces off it. Okay, when price comes up, there is invariably still supply, there are still orders sat there, and but price moves away from there. So being able to identify those order blocks becomes useful for SMC traders, but it is actually something that supply and demand traders will use. Okay, something that any trader can use, because actually what you start to see, especially on the bigger time frames, I find, is it's almost like it frames the range within, and then you'll basically narrow down to find your own particular trading method, okay, or trading model to activate in that. When it comes to order blocks, there are actually quite a few variations, and you would find that things like mitigation blocks, etc., breaker blocks, and there are more. And as I said, I don't really have the time for us to go through that today. We could do that in future sessions if you particularly like it. But if you can just even identify order blocks, all right, or identify liquidity, identify order blocks, that can be just a starting point in helping analyze the market, okay, and start being able to understand how SMC traders are viewing the market themselves. And a variation on that, as I said, there's quite a lot. One of them is a thing called a breaker block, and a simple definition of a breaker block is like a failed order block. And the idea is that this is where the smart money is going to enter the market to mitigate a potential loss, and when price returns to that failed order block is when traders will look to enter. Now, what does that particularly mean? And in this particular example, this is what's euro dollar 4-hour chart. Price had been working its way down in a downtrend, and it continued. You can see there was a very big drop there. Okay, there was a very big drop. So supply and demand trader would call that a drop base and then another drop. And what we're interested in is remember we were saying is that kind of like order block is what's the last bullish close before the big drop. That's what it was there, and you project that forward, and that becomes an order block, and we can see that price basically comes back to that order block. But once it starts to close above it, well, it can be deemed that variably that order block has failed, because most people would have expected it to come up and then price to continue down. So when it doesn't, when it starts to close above order blocks, and you'll hear SMC traders start to talk about words like displacement and PDRAs, etc. As I said, those are more, let's say, more advanced variations, which we could cover in future sessions. But what we're interested in today is when we see an order block failed, well, then sometimes that can actually be where, just the mere fact that order block is failed, you could think that in some ways that some of those orders in there have been filled. And actually what we're seeing is that the bias where we might have felt that price would have dropped away, well, actually it flips, and suddenly we start to see price respecting that order block to the other side, and this is when it becomes a break block. The initial order block has failed, and what's now actually happening is it's flipped and it's turning. From being what might have been resistance, it's now becoming support before price makes its next move up. And there are variations on that theme, and you will find people have variations, but just being able to look back and understand these quickly, which help. Evelina, I hope I've pronounced it. So for which instruments the SMC work particularly well? And what you will find is that they tend to focus on trading, because a lot of the SMC traders are trading very, very short term, even though the concepts work across the spectrum. You'll find an awful lot of them are trading very, very aggressive intraday time. So they need instruments that are very liquid, okay, and that basically they have very tight spreads on. So you will see things like the American indices, so S&P, NASDAQ in particular. And you will also see euro dollar and pound dollar. They are particularly prevalent in terms of the trade. But you will find there are other instruments. You can trade. But those tend to be. I would suggest those four are the kind of the main ones that you see time and time again. But we will see it across lots of others. So that's what a breaker block is. A breaker block is just a failed order block. And this is an example. I was just saying that actually lots of the traders use very, very, very short time frames. Trading on sort of kind of 5 minute, 1 minute. I've even seen traders trying to trade beneath that. Yeah, good luck to them with that. Is a case of, but the actual concepts will work across all time frames, and that's what we're trying to get here. And just this is the monthly chart of the euro dollar, and what I wanted to be able to see was that we can see that price actually did make a strong move. Remember, that is it's a bullish order block. What was the last it was the last bearish close candle before price rallied up. You project it forward, and this is my own interpretation. I tend to, if it's like an area of demand, if you're a supply and demand trader, it's a bullish order block. I would normally color that as very light green, so that because sometimes these order blocks could be there for a long time, and it's to remind me that it's bullish and that I should be looking for buys. And you can see there actually, and this is a monthly chart, so that this was created in 2017, but it's 3 years later before it actually basically came back and tapped it, and you can see the price action reversed off there, before it went up. And actually what we see is price went for the rest of the year, price rallied there. Here, this would be created initially as an order block, because we were looking at price, this was the last bearish close before price rallied its way up there. And then basically price started to roll over, and then once it started to roll over, what we're identifying structure, which is what we're going to come on to in a minute. But you're looking at, well, where's the last bullish close before price moved its way down, and you're projecting that forward. All right. And as I said, for a bearish order block, I normally have it kind of a very light pink, because it just reminds me if price comes back into that area that I should be looking to short the trade. So price action traders might say, well, actually, do you know what, Paul, that put in a double top there before it rallied, down as people price action. Supply and demand traders will be looking, well, this is a base, this is a rally, this is a base, this is a drop. And SMC traders might be looking at, to just basically to trade that return to that order block. So there's lots going on there, but what we can see here is also, let me just cut this out here, is that what we'll see is, that was the order block, okay, that ran our way up, but it also, we provided structure there, which is I'm going to come on to in a moment. But, once price started to trade through it, it's flipped. It's flipped from being an order block, okay, to being a breaker block. And actually, you can just even see the price action within that was giving us an indication that we were to continue down. In the same way that the price action here, okay, all these pin bars here was giving us an indication that this bullish order block was likely to hold, and we can see that basically price rallied its way up. We can see that basically it had a little bit of a think about it, where in this zone of the breaker block before it just made its last push up. Okay, it makes its last push up there into the overall order block there, bearish order block before it double tops, all right, before it rolls over. So there's elements there of SMC, price action, supply and demand. They are all interested in similar areas, all interested in price doing a similar thing at a similar time and place, and it is just a variation on the theme in terms of how you look at it to identify, what your particular, what your particular path is, or what your particular trading plan would be. Just another example of of a kind of a breaker block. Price had made its lows here. Okay, price had moved its way down to its lows, and I'm looking back here, and this was the last, the real last big strong bullish candle. Before we move down, it also there's structure there. Okay, which is looking forward. So predicting that forward as as an order block there, we can see it basically it bounces off it a couple of times, doesn't it? But it's not. People will be looking for it to bounce down to where? Well, to down here. This would be liquidity. This is the low, people, but it doesn't, does it? It doesn't. And in fact, actually, what happens is we can see the price basically, bang, pushes its way up to there, taps, and you can see that actually, that was probably news. The price basically flips around it before it starts closing the other side of this order block, which means we've now gone from an order block to a breaker block. Price comes back down, and look at this. There's a rejection candle there. Okay, price is flipped before it moves, and then we get breaks of structure here before it goes on. This is another order block. Okay, before price pushes up to the last part, and now we have structure there, and you'll be looking to see, does price come down here and bounce, or does price come down and break? Okay, and come back up and retest before we go down. So, there's areas there that people can identify, okay, and work with, and it allows you to plan ahead. I mean, this is a 4-hour chart, but as I said, lots of people will trade it on a short time. But actually, the ideas, the concepts, once you get into the practice, being able to identify and draw them, okay, start to work across all time frames. Some of the other simpler concepts and terminology that you will hear SMC traders talk an awful lot about, FVG, fair value gaps. Okay, you'll hear them talk an awful lot about this. What is it? Really, all it is it's an imbalance in the market. It is a gap that is, the imbalance has created a gap. It's almost like a vacuum in the market. And an FVG is really it's a 3-candle combination, and all it's really demonstrating is showing is when price leaves a level and it moves in one direction, and it can be used as an indication of the strength of the move. And some SMC traders will love to trade the return into an FVG. So this is, and there's there are lots of terminology that that regarding FVGs and different types of them that you can dig into and find. But ultimately, what we're looking for, as I said, it's a 3-candle combination, and it's a 3-candle combination where what we're looking for is there's a gap. And what is the gap? How do we look at the gap? What you want to look at is, if this is candle 1 and this is candle 3, there is no overlap between candle 1 and candle 3, is there? There's no overlap. Whereas if you were just to, let's say, even just look at this price action here, you look at all of the candles, they overlap each other. Okay, the wicks, they overlap each other, all right? And it's actually, I'm just trying to eyeball this. It's only till here, when this basically look at it, it makes a really strong move up there. And what happens is candle 1 here, candle 3, they don't overlap. There is a gap. All right, there is a gap. And it's actually when price returns to it, there's another gap there. Okay. And that's what you're looking for. And on, that's it's a bearish one. On a bullish side, okay, you can have, candle 1, candle 3. And if you look at between candle 1, candle 2, there is no overlap. All right, there is no overlap between candle 1 and candle 3. And that gap, okay, because price has basically shot up there, right? There is an imbalance, and that's giving an indication of a strength of a possible move. Okay, it's a possible strength move, and that's what. Here we go. That's what happened here. Price was coming down. All right, it reverses, and then the fact that we can see that there are FVGs there are gaps there. Okay, price comes back into it, tests it, and that's what lots of S&C traders will try and trade before price moves up. Right, so they will take on board. They will look here and they will look for what they call a premium discount. All right, to identify, but as I said, that's a bit more advanced that we'll do in another session. Really, all I want you to be able to do is to identify when you see things like fair value caps. Okay, it's just an imbalance. The market has really just moved very strongly in one direction. It's like a vacuum. It's just basically sucked it up there. Okay, and it's moved it that way. And that is what we are. That's what we're particularly interested in looking for, because it's giving us a good indication that price will continue. And it's when price returns to that area that might provide us with a significant trading opportunity. So that's FVG. And then also we have break of structure. And, as I was saying, understanding supply and demand and understanding break of structure and understanding liquidity, they're all very key elements, concepts of SMC. And one of them is break of structure. A break of structure is where price surpasses the previous low in a downtrend and where price surpassed the previous high in an uptrend. What does that mean? So, price here in this particular case was moving down. This is our structure. It's a bit of liquidity. When price trades through it, that is a break of structure there. When price trades through here, okay, that is a break of structure. Okay, as price moves on its way in its downtrend. When price reverses and breaks the previous highs in a downtrend or the previous lows in an uptrend, then that is known as, you'll see it there, but really it's what they call a change of character. So, we were in a downtrend, and basically we can see that basically price was making, and every time it's trading through the previous liquidity, the previous lows, that's, break of structure, and we get a low here. Price action traders are already starting to get interested because we're getting, rejections, we're getting price action candles. But what we're looking for is if you look here, the swing point here, once price trades through that, excuse my everyone, that is a change of character. Okay, it's a change of character, and also it involves, what does it involve? It involves a fair value gap as well, and that's what we see price basically move through. And now we've moved into an uptrend. When price trades through that liquidity level, now that is a break of structure. That's a break of structure to the upside. And so this, break of structure, understanding the breaks of structures and the change of character, once you're able to recognize and work that out, well, then that invariably gives you an opportunity, even just to basically to analyze the possible bias in a market. But my own view is that I wouldn't necessarily consider it massively different from just simple price action, simple Dow theory of lower lows, lower highs, followed by higher highs and higher lows. Okay, so I would be looking at this. These here, these are lower lows. Okay, these are basically lower highs. All right, and once it's broken, bang, that's a change of character. That's a swing. What do we see? Price comes back to that kind of change of character there. Price comes back and taps it before it goes, and then suddenly, what is this here? This is now a higher low. This is now a higher high after this one that has been broken. And so, as I said, in many ways, there's not massive changes. It's just a different perspective, a variation on perspective, and that's I think, as I said, sometimes because it can be quite technical and jargon, and there's an awful lot of terminology. I think sometimes if traders have learned things like Dow theory or price action or supply and demand, maybe they can get a little bit overwhelmed. But actually, a lot of the concepts, there's a degree, there are elements that are of similarity. So don't be overwhelmed by that. More importantly, I suppose, for many people, is it a valid way of trading? And as it says there, SMC focuses on copying the trading patterns of market makers such as banks and hedge funds to gain an edge in trading, as we sort of said earlier. In reality, SMC traders are not trading like big banks or hedge funds. They're merely interpreting an approach of how they believe the big players might possibly trade. That's it. Okay, there's just an interpretation. It's just a variation on things. Ultimately, how it can help is it can provide a very simple framework that allows traders to analyze, interpret, and trade markets in a way that suits their own particular trading style. But I would say that is not that massively dissimilar to any other trading approach, whether it be Dow theory or price action, supply or demand. Okay, what you're wanting is a simple framework that allows a trader to analyze, interpret it, and trade markets in a way that suits your own particular style. So, do I believe it is a valid way of trading? I do believe it is a valid way of trading. I do believe there's some elements of it which are excellent and can be taken away and utilized. What I just say is that, in my time of trading, is that the key to successful trading, it doesn't really change that much. Namely, that if you are not managing risk, your trading career will be short, regardless of how you choose to trade. If you're not managing yourself in terms of just coming from a good place, working on your internal challenges, just basically managing your ego, doing all the best practice elements like keeping good records and reviewing and reflecting upon your trader, if you're not doing that, once again, you're going to struggle. What you also want is a framework to be able to analyze a market, to identify what might be the possible bias, might be bullish or bearish, or significant points, levels, areas of interest, however you wish to define it. That's it. We want to be able to identify that bias and identify areas of interest where we are interested, because that might be a place where a market has to make a decision, and that is what we're looking to take advantage of. And what I will say is that a good trading method, have tactics that work well in the prevailing market conditions, right, and provide an asymmetric reward to risk approach. So, your tactics change. If you're playing a game of tennis, your tactics would change, okay, based upon who you're facing. Or if you're playing a game of rugby or driving a Formula One car or on a battlefield, your tactics change based upon the prevailing conditions you find yourself, all right, and being able to adapt to that. That is the important element, okay. And once again, that doesn't matter whether it's SMC, price action, supply and demand. It's having tactics that work well and that provide asymmetric reward to risk. So, and what I mean by that is, if you're risking 50 euros, you want to be able to be in a position to make 150, 200 euros, okay. That's the thing that successful trading, those elements, management of risk, management of self, a framework to be able to analyze markets, okay, to identify bias and significant levels, and tactics that you can employ consistently and with discipline time and time again. These are the things that make successful trading, and SMC can be part of that. All right, SMC can be part of that. So, in conclusion, ladies and gentlemen, here we are, Monday Market Matters. It has already been an interesting year in markets, and I suspect it's going to continue right through the rest of 2023. The smart money concepts, they are presently a very popular way of trading on social media. They are not without their controversy, okay? And I said, we're not going to go into that today, all right? There's plenty of ways to debate that on social media. You're very, very welcome to. If you want to speak about the individuals or the individual account it comes from, that's absolutely fine. Ultimately, though, this session is right. How can it help me in my trade? And that's really it. That's all we're interested in. Lots of people would see it as an alternative to price action trading or supply and demand or Dow theory, however, okay? There are lots of technical jargon, but hopefully I'm showing that many of those aspects are not massively different from other ways of interpreting, analyzing, and trading markets. SMC traders, they are interested in their interpretation of supply and demand and market structure, and their relationship is the way they create a framework in order to trade. And there are some of the very useful concepts, and there are elements in terms of breaks of structure, changes of character, okay, that I utilize in my own trading. There's elements of gaps trading that I utilize. There's elements of understanding where liquidity in terms of supply, support and resistance in terms of where we can identify areas that are of interest to me. So there are some very useful concepts, and you can take away, and there's an awful lot you can dig into. Okay, there's lots of people out there now on social media offering their own interpretation. What I would just like you to take away is that yes, they can be very useful, helpful, but you still need to manage risk, manage yourself, be able to analyze the market, and trade with discipline and consistency. Those are the key elements of really good trading, regardless of the tactics you may particularly look to employ. So, we're running out a little bit of time and stuff, but before we finish up, I just want to remind you that next session, Monday Market Matters, hopefully we won't have the tech issues that we've had today. Should we be looking to trade pullbacks or breakouts? That's 24th of July. We'll talk about that, okay? And as I said, those are variations of themes in terms of how people want to trade. So you see the QR code there if you want to join us, all right, and sort of take a little bit more on board, different ways of looking and operating in particular markets. And as always, if you've got any questions or comments, okay, or feedback, then by all means, you can send them here to ActivTrades. As I said, the email address there, englishdesk@activetrades.com. As I said, I apologize. We had a few little tech issues there at the start. It's just nobody set out to have them do these. Just frustrating when they kick off. Even when you've done tested all your audio and stuff. But anyway, it is what it is. But if you found this useful, if you found it helpful, if you'd like us to do more elements of it significant, well then just drop an email, okay, to englishdesk@activetrades. We always like the feedback. We always want these sessions to be valuable and useful to you, and we can take it forward from there. So unfortunately, we've run out a little bit of time today, and I apologise that due to the tech issue, so we won't go over the markets today. But what we will do is, of course, we will be back next Monday, and we'll definitely be able to sort of look at the markets and take a view on what's actually going on. And as I said, I hope this is just giving you just a little bit of insight into just to some of the basic concepts and understandings that you can take away for your own trading. And there's lots more to learn as always, but hopefully just if you can just even understand the most basic of concepts, it's a starting point, okay, on your particular journey. So as always, I wish you the best of success in your own trading, ladies and gentlemen. Hope you have a fabulous trading week, and we'll look to speak to you soon. Take care and trade well, everybody. Cheers.